Good afternoon, everyone. My topic is about the government-sponsored enterprises or federal agency securities. The government-sponsored enterprises or GCS is more commonly known as federal agencies, financing entities set up by Congress to make loans to specific groups such as farmers or homeowners. The debt issued by these entities is normally sponsored by but not guaranteed by the U.S. government. These securities are obligation of the U.S. government. Nevertheless, the debt of this GCS is viewed as strong credits based on limited lines of credits from and a perceived tie to the U.S. government. So the government-sponsored enterprises are like special companies that are created by the government to help specific groups like farmers or homeowners to get loans. They issue their own debt which is not directly guaranteed by the U.S. government. Although GSAs issue debt across the entire yield curve, their short-term issuance is a significant sector of the money markets. While the debt comes in a variety of forms, the most popular issues are known as discount notes, also known as discos. Discos are short-term obligations issued at a discount from face value with maturities ranging from overnight to 1 year. Ang GSS also nagborrow sila og money for short periods like it's up to a year. They do this by issuing something called the discount notes or discos. So ang discos daw is mo ni kibali ang way sa GSAS to get short-term funding and then when they mature, the buyer gets the full face value back. The disco market is another large and liquid market on a daily basis. The US disco dealers bid and offer billions of these short-term securities. GSAs can also issue callable notes with maturities of 13 months or less, giving the agencies the ability to call notes priority to maturity. The investor is normally rewarded with a higher yield for providing the agency with this call option. Ang GSAs also nag-issue pod sila og callable notes. Gitawag nga callable note. These notes can be paid back early by the GSA before they mature. So, to make it worthwhile for investor to accept this risk, ang GSAs nag-offer sila og higher interest rate. For this way, even if ang note is it is called early, the investor still make a good return. Next is the commercial paper. It is a short-term unsecured promissory note issued primarily by the three issuer types. First is corporation, second financial institutions including the banks. Next is the special purpose vehicles funding high quality assets or also known as asset-backed commercial paper or ABCP. This commercial paper is a short-term unsecured promissory note. It is issued by the corporations, financial institutions, and a special purpose vehicle to meet immediate financing needs. The commercial paper market is an attractive source of funds for issuers since it provides a lower cost funding alternative to bank loans. SEPI maturities typically range from overnight up to 270 days, averaging around 30 days. So kasagaran na siya maturities less than 270 days with the most maturing around 30 days. Ang commercial paper it serves as a vital tool for the various entities to get money for their everyday needs to meet the short-term financing needs. Issuers that are highly rated can raise billions of dollars quickly and efficiently without incurring securities and exchange commission, registration fees, and avoid the essential disclosure requirements, including the creation of detailed offering memoranda that are required for longer dated debt and equity securities. So, a lot of borrowers can borrow large amounts of money quickly and easily. Dili na nila need nga mabayad pa sa SEC. This because their strong reputation make the investor to trust them more. So, next discussion is ang commercial paper is pwede siya mabaligya sa company through the brokers who help to sell it. The buyer of commercial paper kibali are mainly the big investors, like for example sa money market funds, large businesses, and local government and local governments. So just like treasury bills daw and discount notes, ang commercial paper is usually sold at price lower than its face value. Instead nga magbayad og interest, ang investors can make profit by buying it at a discount. Next is, commercial paper is usually issued with a specific maturity date. If an investor needs their funds prior to the maturity date, it is possible to sell the commercial paper back to a dealer for that issuer program. Meaning, it will be repaid on a specific date. If ang investors need nila money before that date, pwede nila ibaligya ang commercial paper nila balik sa mga brokers or dealers nga mao'y nag-handle sa issuer programs. It allows investors nga makuha nilag sayo ang ilahang pondo bisan wala pa naabot ang maturity date. So there are 3 issuer types. Name is the corporations, which in 2016 it accounted for approximately 25% of the total commercial paper market. Second is financial institutions including banks, accounting for approximately 50% of the market. And third is the asset-backed commercial paper or ABCP, which accounts for approximately 25% of the market. The issuer category types are as follows. Financial institutions include banks, insurance companies, securities firms, and finance companies, but banks are the most active of all in the financial institutions category. Corporations include any non-financial firms such as industrial, technology, public utility, or service companies. The asset-backed commercial paper or ABCP in the contrast, the conventional CP issued by corporations or financials is backed by defined pools of assets. So, the first ABCP programs daw were established in the mid to late 1980s. So, by August 2007, the ABCP market had grown to 1.2 trillion, accounting for 55% of the commercial paper market. So, dati, ang iyahalang sa una is 25%. So, in the past year, it accounted for 55% of the CP market outstanding at that time. So, ang all CP programs are often rated by an independent rating agency or agencies for credit worthiness. Rating agencies including the Moody's Investor Service, and Standard & Poor's and Fitch Rating Services have short-term ratings protocols similar to the ratings on longer-dated corporate and municipal bonds and other long-term debt. So, ang CP programs DI is ginarated naday po mga agency nga nag-rate ani. Isa na ani ang Moody's Investor Service, Standard & Poor's, and the other one is the Fitch Rating Services. So, the highest quality commercial paper has the ratings E-1 over P-1 over F1 or E-1 plus over P-1 over F1 plus. E-1 plus E-1 and F1 plus are the highest short-term ratings given to the commercial paper by Standard & Poor's, Moody's, and Fitch. Next, respectively, while P1 refers to the highest rating given by the Moody's Investor Services, these short-term debt ratings are opinions of the rating agencies as to the ability of issuers to repay their short-term obligation in a timely manner. Since even a delay of several days, it is considered a technical defect. A Moody's issuer rating of P-1 prime-1 indicates that Moody's believe that the issuer has a superior ability to repay its senior short-term debts obligation, meaning ang issuer is kanang very likely to be able to pay back its short-term debts on time. It show excellent financial strength. Issuers rated Prime 2 have a strong but not superior ability for repayment of senior short-term debts obligation, meaning the Prime 2 indicates the issuer can still pay back its short-term debts well, but not as strongly than prime 1. This will normally be evidenced by many but not all of the characteristics cited with prime minus 1, the lowest short-term rating, which still correlates with long-term investment grades rating is P minus 3 or prime 3, where the issuer's ability to repay is deemed acceptable, even though variability in earnings and profitability may result, however, in changes in the level of debt protection measures. So, pasabot nga ang issuer makabayad gihapon but there is some risk of changes. If its earnings or either of its earnings or financial stability. Standard and Poor's maintains a similar short-term rating system to Moody's with E-1 designating the degree of safety regarding timely repayment is strong. Issues rated E-2 indicates that capacity for timely payment is satisfactory, although the relative degree of safety is not as high as for issues designated E-1. Issues carrying the E-3 designation have adequate capacity for timely repayment. So, ang standard and Poor's is similar lang siya sa Moody's rating. Next is, almost all commercial paper programs are backed by bank liquidity facilities as a condition to providing a rating to OCP issuer. The rating agencies require that an issuer have access to bank liquidity lines that will allow the issuer to repay the commercial paper in the event that investors suddenly stop purchasing that program. So, most commercial paper programs are supported by bank liquidity facilities. The rating agency nag-require sila sa mga issuers to have a backup loans from banks para ma-ensure nga mabayaran nila ang investors if ang mga tao is mag-stop na sila palit og commercial paper. It gives security to investors nga naay backup plan if